The 2020 Minority Health Film Festival offers a diverse variety of films and events that we just wouldn't be able to offer in the in-person cinema experience. But I think what really makes it unique is the focus not only on public health issues, but the issues that really concern communities of color. If you're looking for a reason to engage or to try it out, this is the perfect time. Just go to mkefilm.org/MHFF.
Good afternoon and welcome to the Color of Money session for the Milwaukee Upper Minority Health Film Festival. And I am so happy to be joined by several amazing guests. Opal, Mainza, Ashley, and Ed. So happy to have you as part of this Color of Money session this afternoon. Before we get started, we are going to have a spoken word piece by Opal Tomaszewska just to get us started and grounded in this space right now. So Opal, take it away.
Awesome. Thank you for having me. The piece I'd like to share is called Imagine and speaks to some of this work that we do in the DEI space. I actually wrote this piece for Deanna Singh, who is from Milwaukee and a great voice within the work of DEI and folks coming together. So I invite folks to just get comfortable, relax, close your eyes if needed, and enjoy. Imagine a system whose brokenness wounds you deeply. And in order to win within it, you suffer discreetly, only speaking upon woes when asked, made to feel entirely too small under a constant magnifying glass that distorts your features into stereotypical lines. These are the ties that bind. So many of the oppressed to the oppressor. Yes, even in your attempts to do greater good, we are made to feel lesser when we are not even consulted about our own expertise. When the assumption is the truth is more what you believe than what we are living at any given moment. Discounting our experience as the main component to a whole great as the sum of its parts. If we are not careful, this is where division starts. But my hope is hearts are gathered to change that. Let's take the art of peace and reframe that which keeps us separate. New measures for times so desperate yet so pivotal. Our conditioning has been so critical to the continuation of separation and the sensory deprivation that has occurred as a result. Let's open the vault and see what treasures lie beneath. What keys to the solutions we seek are just on the other side of fear. If I may, while I have your ear, can we peer into each other's eyes so deeply that we understand that the shifting of power isn't an exchange of a gift, it's a releasing of a burden neither of us was meant to carry. Letting go of what we've always known can be scary, but trust in my ability to lead. Trust that I'm not the only one here with need and we can get through this and do this. But I cannot alone and neither can you. Every big shift started with a chosen few so radically dedicated to change that their discomfort was a necessary casualty. And I don't say any of this casually as I think of lunch counter sit-ins and boycotts that shaped our nation. I'm simply asking us to start by having uncomfortable conversations that can create a new narrative. Written by all of us, so it's imperative that we are open enough to seek the truth and vulnerable enough to receive proof when it's presented. Seeing the importance of us being equally represented and leaving judgment to the hands of future generations. Can they look back and understand how we had to let go of hatred? Or will they look back and see us driven by greed and power? I prefer that this minute be our finest hour and that our lead is admired, our unity desired by all that is to come. But we can only do that by admitting that the histories we come from are one. Thank you.
Thank you, Opal. Every time you do a piece, I'm gushing, just totally gushing. So thank you for starting us off. I think that was a great way to start off this conversation. And I think talking about money and the connection of money and overall well-being in health is so important. And I just want to start off this conversation with this statistic. According to the Federal Reserve, irrespective of education levels, Blacks and Latinx folks are less likely to say that they'd be able to handle a $400 emergency while covering all of their other monthly bills. 50% of Black and Latinx folks do not have $400 for an emergency. That is a huge issue and something that we need to talk about because that impacts us every day. And so this connection between overall wealth and economic well-being and health has been talked about a lot. And the model that I'm going to show to start off this conversation is something called the bar high model. I'm going to pull this up right now and see if it works. Hold on just a second. It's not opening up the way that I should, per usual. This is what happens with technology. Let me just try that again here. Oh, there we go. I'm going to try to share my screen again and let me know when you all can see it. All right. I think I'm sharing it now, and I'm going to share it a little bit bigger. So this is called the Bay Area Regional Health Inequities Initiative. It's our framework. And what I'm going to do is start on the right hand of the slide and go backwards. So right now we are seeing the disparate impact on COVID on our communities, our Black and Brown communities. We know that we are more likely to die from COVID. So if you're looking at health outcomes, so oftentimes in public health, we say, and we see with COVID, that the disparate impact in mortality is driven by a difference in disease and injury, which is oftentimes driven by a difference in risk behaviors. So lots of times in public health, which is my background is public health, we say, let's educate the person to stop smoking or improve their nutrition or increase physical activity. But what we don't address necessarily are those living conditions that impact the downstream impact of mortality. So those living conditions that influence risk behaviors, which influence disease and injury, which influences mortality. And then what's influencing those living conditions is more often than not our institutional inequities that have been institutionalized by our corporations and businesses, our government agencies, schools, laws and regulations, and embedded into our non-for-profit organizations. And what are those institutional inequities driven by? Social inequities and biases. So class, race and ethnicity, immigration status, gender, sexual orientation, and a whole variety of other things that influence all of these downstream outcomes over time. So if we just pause and just talk about specifically economic well-being and wealth, we know that things such as payday lending and the history of redlining influences living conditions over time, which influences risk behaviors, which increases mortality. And this framework is such an important framework for understanding the intersection between economic well-being and the health disparities that we see over time. So I wanted to share that framing to help frame our overall conversation in terms of the color of wealth. So I've stopped sharing my screen, hopefully right now. And I want to start off with Opal. Opal, can you chat a little bit about your work at CUNA Mutual Group and what the financial impact that COVID-19 is having on folks of color?
Yeah, absolutely. Thanks, Angela. So I work in our Multicultural Center of Expertise, and we're really looking at the diversity and culture of communities and of consumers as well. So we're looking to really find ways to serve traditionally underserved communities in terms of financial services for our business. So we use this lens of culture to look at our products, our services, our marketing, how we can help with access to make sure that we're able to kind of focus on this population that has been left behind, finding places where we can meet consumers where they're at. And we focus a lot on race and ethnicity. We've got a lot of numbers around that, and there's a lot of deficit around that. But our idea of this multicultural is a lot larger. So that also looks at folks in terms of gender, LGBTQ+, looking at ability status, looking at income levels. A lot of those things are left off the table when products and services are designed. So we're trying to find ways to make these things more equitable to help with the wealth gap. And our mission is really to get more folks to financial financial security. And in terms of COVID-19, we all know, or should know at this point, that when COVID-19 hit, the impact to communities of color was huge. So right away, we saw this early on, reporting things of twice the hospitalization and death rate for African Americans versus white Americans in contracting COVID-19. And in the 6 months since then, I'll drop some numbers for you. So now we've seen that rise to 3.6 times likely for African American to die versus a white person from COVID-19, 3.4 for our indigenous communities, 3.2 for our Latinx communities, 3 times for Pacific Islanders. And we know that there's this huge correlation between health and wealth, the cost of healthcare alone. And when you can think of how expensive that is in addition to job loss. On top of that, we're seeing that affecting different communities. So 49% of Hispanics are saying that they're either themselves or someone in their household lost wages or lost a job due to COVID-19. 36% of African Americans say the same thing, compared to only 29% of whites. Some work from home stats, 1 in 3 white and Asian Americans are able to work from home. That's only 1 in 5 for African Americans and 1 in 6 for our Hispanic professionals. So we also can think of how many essential workers are people of color and how that is risking your wages as well as your health at the same time. So just this huge impact of health and wealth and the huge correlation for our communities of color that we're seeing play out before us every day. And unfortunately, those numbers are continuing to get worse. Oh, I think you're on mute, Angela.
I am on mute. Sorry. Thanks. Thank you for that overview, Opal. I want to go to Ashley. Ashley, in your work, you have a specific lens towards lending as it relates to student debt and small businesses. Can you discuss some of the trends related to folks of color, related to student debt and small businesses pre-COVID and post-COVID? And then I have another follow-up question for you.
Absolutely, thanks. So I work at the Center for Responsible Lending. We are a nonprofit policy and research org dedicated to ending predatory lending and helping families of color and low-income people build wealth. So we think a lot about the institutional inequities that you were talking about earlier that are part of that model and are central to understanding all of these pieces. So I think Opal putting more of the context in about how COVID-19 has disproportionately impacted people of color, including the economic impacts, right? And also remembering that communities of color haven't even recovered from the Great Recession. We're 10 years out and we lost over $1 trillion of wealth during the Great Recession that has never been regained. So the recovery that folks were talking about that we were in before COVID-19 hit had largely passed communities of color by. And so now we're in a situation where an already bad situation has been compounded by this public health crisis and the economic crisis and the economic impact that it is having, which is, again, much greater and much more felt in communities of color and low-income communities. And so we have to keep that context in mind. And all of this goes back to this history of kind of dual financial systems in this country, where people of color have been guided to fringe and non-mainstream financial services products and lenders because they have not been well served or even allowed into the mainstream financial market. That's why you see them being steered towards high cost mortgages, high cost small dollar payday loans, installment loans, paying more for auto loans, being targeted by predatory for-profit colleges. Student debt crisis impacts people of color more and Black borrowers in particular. And all of this goes back to a lack of access to affordable credit. We have a system in this country where poor people and people of color are expected to pay more for everything, including credit. And if you have to pay more for everything, especially credit, how then do you ever get out of poverty? How then do you ever build wealth if you're constantly struggling to maintain? And so whereas white folks are able to build wealth, Black people, Latino people, people of color are steadily building debt. And so we approach it from that situation. So even before COVID-19, student loan borrowers, for instance, were struggling. 2 in 5 were in default or delinquency. Black graduates were more likely to default than even white college dropouts. And that's because they are forced to take out more. They struggle more in repayment, and it takes them longer to pay it back because, again, they had to take out more debt to begin with because of the lack of generational wealth that was passed down from families, the lack of home ownership opportunities, the lack of credit to do things like start and maintain small businesses. There was already disproportionate access to small business loans even before we ever got to the Paycheck Protection Program, which hasn't well served business owners of color, which we could expect to happen because, again, the financial institutions have never well served people of color, including entrepreneurs of color. And so reminding ourselves of that context, we have to be intentional about the policies we put in place and the programs and how we implement them to make sure that they are getting to everyone, that they are getting to communities of color. And that requires an extra step. You can't just rely on the system to get resources to everyone, because the system has never done that. And in fact, it was designed not to. So I think I answered the question, sorry.
Yeah, you did. That was awesome. I have another follow-up question as it relates to the recovery and the Dodd-Frank Act. So Congresswoman Maxine Waters created a House committee focused in on D&I within the financial services industry. How do you think that this congressional work will impact lending as it relates to student debt and small business? And how is this work of this committee necessarily going to change as it relates to the several pandemics of racism and COVID that are happening right now?
Yeah, well, I think the D&I committee is pivotal, and it looks at more than just small business student loan and student debt. It looks at all types of lending, and it goes back to this idea of intentionality and oversight. So looking at financial companies and financial institutions and what their ranks look like, right? Because there's something about who is at the table at these companies, and to then what their policies and practices look like and who they serve. So it starts there, but then also looking at the financial regulators and how and whether or not they are diverse or not, right? So there was a report recently about the lack of diversity in Federal Reserve board chairs, and those are the boards that are creating monetary policy. Those are that are overseeing all of this stuff, that are overseeing banks and institutions. And so the fact that you have rarely had a Black person on those boards, right, is very important to think about. It's all part of it. Who is at those tables, and then what do those policies look like? So to have a subcommittee that is looking at all these things directly, to have that type of oversight, and I think this is the type of oversight we've seen in general more this Congress on the House side and House Financial Services, is really holding institutions accountable. But also we need Congress itself, we need the federal government to hold itself accountable. We need action. I think, where everyone, we're all devastated by the loss of Ruth Bader Ginsburg. And I was even more appalled by this idea that we're going to immediately fill this seat and immediately use up resources to work on this when we haven't even passed another COVID relief package, and so many families are struggling, can't pay rent, have no idea what next month looks like, and we're focused on filling a vacancy instead of making sure the election goes well and that people can actually stay in their homes. So I think all of it goes back to that intentionality piece, and part of that is who is at the table and how they're able to have an input on the actual implementation.
That's huge. That's really huge. Thank you, Ashley. Ed, I'm going to transfer to you. And you've had a front row seat in experiencing the impact of the systemic nature of inequity in the financial services industry. Can you share your story about the impact of the 2008 crisis on you and your family, and how you had to rebuild, and what do you wish you would have known then that you know now?
Sure. So I'm going to give you a really broad, detailed answer. At the time, I was working for an African-American bank, right? And so our focus was to provide capital to business in a central city during that time period. And you know how the saying goes, when a white America gets a cold, Black America gets the flu. And so working at an African-American bank that focuses on lending money to central city businesses. So when the '08 recession came, our customers were affected at a greater proportion. And so what that meant that these businesses couldn't afford to pay back the loans that they borrowed from the bank. So now the bank revenue was down because of this recession. And so what the bank had to do was really reduce its expenses. And so they laid off some of their senior employees, which included myself. And so the overall effect of this recession really had a greater impact, not only on me, but also my community. And so what I decided to do, well, instead of sitting around feeling bad for myself, I created a consulting company. And I remember reading the book, Who Moved My Cheese, back in like the early, late 90s. And, if the cheese move, you have to learn to adjust with the movement of the cheese or movement with the economy. So I ended up creating a consulting company, and then I went back to that bank as a consultant, and then I also drove Uber to help take care of my family. But a lot of businesses, they couldn't make those changes during that '08 recession, and also during that '08 recession, a lot of minority banks were closed because of their focus of providing capital to their communities, and our government really did not assist because they were treating the small banks like the larger banks. So the Dodd-Frank Act really had a huge impact on these financial institutions. So you look at African American banks right now, it's probably less than 50% of the number of African American banks than there were around 2000, 2005, 2006 because of these laws. And so that really has had a great impact on Central City community because larger banks, everything's based off numbers versus smaller community banks, the lending is based off of relationships and what's important to those communities. And right now you look at, like, especially with COVID, a lot of your larger financial institutions, they're not lending to restaurants, in which a lot of minority, their business models are to start restaurants, construction industry, the service industry. So a lot of your larger financial institutions have tightened up their lending policies and would not lend to those type of industries. So now those industries really have to look at, as Ashley mentioned, at predatory lenders, other forms of capital. But then there are also other ways, I'll just put this out there, for those institutions to borrow money, and that's through CDFIs, community development financial institutions. And those groups were created to provide capital to those businesses who are often neglected by banks.
Thanks for that, Ed. Now, what do you wish you would have known then that you know now?
Save, save, save. Just save as much money as you can, squirrel it away, because you never know what's going to happen. And so, this time around, my wife and I, that's definitely what we're doing, is trying to save as much money as possible, but also enjoy life. But definitely save, prepare for the worst of things.
Right. Thanks, Ed. Mainza, we're gonna go to you now. So you have a pretty extensive background in economic development. What do you think are some of the key components of local and community economic development that need to be intentionally focused in on right now to help our communities of color throughout Wisconsin thrive? And what's the role that small businesses can play in that?
Mm-hmm. Thanks so much, Angela. And, you know, I'm sure all of us on this panel, we could talk about this for hours. But if I may, I just want to backtrack to a couple of data points that were given in the opening with, Opal and Ashley, the both of you as well. And I get on my soapbox about Asian American. Obviously, I'm Asian American, and unfortunately, Asian Americans are oftentimes lumped right into this big monolith. And so the data gets completely distorted when you start breaking the data apart for the Asian American community. And I say that specifically in regards to some of our newer Asian Americans here in this country, right? Like our Southeast Asians who came over as refugees, and many of those are not part of that very successful sounding group of Asian Americans, right? Like the 1 in 3 who are able to work from home. That doesn't apply to all of us Asian Americans. And so that's just something that I always try to put at the forefront of these sorts of conversations, so that we keep in mind that Asian Americans continue to be lumped into this monolith. And there are so many great disparities within very specific ethnic groups as well. But having said that, Angela, prior to my role here at WIDA is Wisconsin Housing and Economic Development Authority, I ran a small CDFI, a community development financial institution, through the Hmong Chamber. So worked very closely with our minority chambers here and diverse chambers here in the state of Wisconsin. There are so many key components, right? When we talk about intentional economic development into our very diverse communities. But one thing I think I want to put out there before I talk about these key components is that many of our communities have never had wealth. So when you think about that, you have to tie that back to economic development. If many of our communities have never had wealth, that means we've not had access to education, resources, knowledge, thought leadership around what economic development even is. And what is wealth if we've never even had that within our communities? And so when I think about economic development, especially in our underserved communities, right away, I think about, how do we meet our communities where they're at? What is the baseline of helping to create understanding of what economic development even is? How do we even help them understand what saving means, right? I mean, if they're not even making, sustainable wages to take care of their own family, how can they even grasp the concept of saving? And so for me, it's always about, how do we meet these communities, our communities, where they're at? It's also about, how are we being very intentional around creating culturally appropriate and culturally relevant programs, resources, information that's going out to our community? I think we have such wonderful economic development organizations in the state of Wisconsin, who really have very real, sincere intentions to work closely with our communities of color. But they're forgetting, again, like, some of the programs and resources you're putting out there make no sense in some of our communities, right? And so again, how are you meeting the community where they're at in terms of what's appropriate and what's relevant to their community? And that includes language barriers, access to capital. Where do they even have access to capital? And that's where that perception, in our conversation prior to us being on this panel, right? This perception from some of our communities that payday lenders are much more accessible to us. They're much more transparent and they're much more hospitable. Isn't that the truth? I've walked into banks and not felt welcomed, and I'm an educated professional. I can't even imagine someone from my community, and I'm Hmong American, who is less educated, who doesn't have, a sound English speaking ability, walking into a bank, like how that would feel, right? And so again, it's about what's culturally appropriate and relevant for some of our communities. And I think too, you as an organization, as the state agency, the entity, whatever your institution you're representing, it is also your responsibility to really do an internal audit on looking at your processes and policies that you have in place and resources that are in place, and really starting to evaluate those to see, are they truly creating impact for communities of color and other underserved communities? And where do we have barriers in our own policies and processes, right? And I think too often we look for external answers when we have forgotten to kind of do our own audit on ourselves to see, where are those barriers that we may not have looked closely at, but that are there for some of our communities in terms of access. And the last thing I would say too, in terms of working intentionally with our communities around economic development, we have to really start investing in building capacity in our communities, and it's not just about throwing money, to community organizations or to CDFIs. It's how do we help build capacity on a technical level, on a professional level, because that's where our small businesses will get their assistance. If our CDFIs don't have the capacity to work with our minority small businesses, who else is going to have that investment into our minority businesses to really build that capacity for them as entrepreneurs and small business owners? So a little long-winded, Angela, but those are some of the key components that really, I think, drive intentionality in working with our communities.
Yeah, I love that. Thank you, Mainza. So I want this group to kind of discuss this notion of financial literacy versus systems change. So in that bar high model that I showed earlier, that when I hear financial literacy, I think of that notion of risk behaviors, where it's like you, vulnerable person, need to change your behavior in order to get to a better outcome. Can we just have a conversation about the systemic nature of wealth inequity and how that to downstream in outcomes and disparities, as opposed to if you are more financially literate, you'll be better off. Who wants to start off their thoughts on that?
Well, I'll just make a comment from a lending perspective and what I've seen, the mistakes of small business owners. And I think, not to disagree with you, but financial literacy is very important when it benefits you, right? So, because there's certain things you have to learn when you operate a small business. You definitely need to understand your accounting. I would say that's number one. That's one of the biggest downfalls I've seen with small businesses, not really truly understanding their numbers, what they can afford to pay, how much they can pay themselves. I think that's key. Those are key points, as well as understanding the market that they serve, right? Because the reason why we're here, because obviously financial institutions, nonprofits, they're not understanding the market, and the market of the people that they're trying to serve, and then certain groups out of that market are left out. So when you begin to operate a small business, you definitely want to really understand who your market are, who are you serving, and then also think about what are ways you can do to benefit you in the future. One of the things I like to see, and when I lend money to people, I come to them as an advisor, right? I take all of my 20 years of experience and I give it to them, and I tell them, look, this is what you can do to save money for yourself and your family, just in case your business fail. You can have retirement plans, because a lot of small business owners do not have retirement plans, not realizing that they can put a huge amount of money away, and those funds are tax deductible. So you don't have to pay money to the government. So just really getting a good understanding of how this whole financial system game work. And there are a lot of professional people of color who really want to help and give all this information out. So, build your network of folks. Feel free to ask questions, and we want you to be sustainable. So you can be around for the next generation, and even sell your business off to a younger person, so you can go retire and they can continue your dream.
Thanks, Ed. I know, Ashley, you were going to try to jump in as well.
Yeah. So I would just say, I think that financial literacy is important and can be helpful, but the true impact of financial literacy is greatly limited by the structural barriers in this system. So I think for the lucky few of us, right, or some of us who have been able to start business. I'm not a business owner, but who have been able to start businesses, buy homes, do all those other pieces. Yes, there are things, having more information about how different things work, having more financial literacy is important, and that's a broad definition of financial literacy. But we can't ignore the fact that federal government, banking institutions have had systemic barriers that have prevented people of color from building wealth. We can't ignore the growing and persistent racial wealth gap. We can't ignore the growing and persistent racial income gap and just income inequality in this country and how it's even being exacerbated right now during this pandemic. And so to some extent, putting the agency on people is not always helpful and I come up from the policy context, right? Where we have to remember that the federal government created the suburbs. The federal government stopped Black people from being able to buy houses, right? The federal government gave people land, gave people houses, and they were white people. They weren't Black people, they weren't brown people. They didn't have those benefits. The federal government denied GI Bill benefits to the majority of Black people, right? The federal government failed, and state governments failed to fund HBCUs and MSIs at the same level as it funded other institutions. The state governments after the Great Recession had a $10 billion hole in their budget and covered it up with higher ed expenditures, meaning that more students had to take out student loan debt. And disproportionately, those people were people of color because they didn't have the wealth, the home equity, and they had even less after the Great Recession, which decimated our communities. So we have to remember that there are all these structural barriers and structural opportunities that were given to other people that were not given to people of color. And until we address those, and until we get real about that, financial literacy will not make a big difference, right? It will help a select few, but if we want to have the type of radical transformational change that actually helps whole communities and whole populations, then we have to change and do something about these structural barriers. And we have to acknowledge them and we have to fix them. When we have an entire banking system that's based on credit scores, and the credit scoring system is acknowledged to correlate race with risk and to be based on data where discriminatory lending and discriminatory practices are baked into the data. And we know the average, and the average credit score doesn't actually determine whether someone would be able to pay back their loan, because most Black people the homeownership rate for Black folks is 47%, right? But Black people are more likely than any other group to pay more than 50% of their income on rent. So that could be translated to them actually paying a mortgage if they didn't have to have a higher interest rate. If they could meet the debt to income ratio, but they can't because they have never been able to save for a down payment, or they have high student loan payments that also go to their debt to income. If their credit score means that they also, and their lack of down payment means they also have to pay PMI. All of those things, mortgage insurance, sorry, I talk in acronyms sometimes. All of those things make it harder for people to get access to credit and opportunity. And then if they get access to that, to keep it, right? And so we have an entire system that is built on a legacy of oppression and discrimination that started in 1619 when they first forced those people across the Atlantic. And until we do something about that, there's a reason why every crisis hits communities of color harder. There's a reason why communities of color are still struggling. So we have to acknowledge that and we have to do something about that. And it starts with the federal government.
I feel like I'm not only shaking my head, I'm shaking my whole body, like, yes, to everything that you are saying. So I'm curious, if you could name the top 2 or 3 structural barriers as it relates to race and economic well-being, what are they right now?
Oh, man. I think we have to create meaningful home ownership opportunities, meaningful small business opportunities, and we have to make it so all of the things that were supposed to lead to financial security and family wealth and that have for other communities actually translates into that for people of color. So CRL, we advocate for everything from a federal rate cap on all loans, so to stop this high interest, triple digit rates loans that are putting people in a cycle of debt that pushes them out of the financial system and further away from traditional credit. But also we need actual down payment assistance. We need to fix our broken housing finance system. When the homeownership rate is the same as it was when we passed the Fair Housing Act, and we have these huge government-sponsored entities that even those are not well serving Black and brown borrowers, right? All of the fact that the credit scoring model forming the basis of this, and that we are still equating race with risk. We have to do something about that. We need to reinvest in higher education as a public good. We need to cancel at least some of the student debt that is holding back so many Black borrowers in particular and preventing them from actually translating higher education, which was supposed to be that great equalizer. Is not for Black borrowers, because the debt itself is holding them back from doing all the other things that we want, and it's holding back the entire economy. And so we have to. Those are just some of the things that that we argue for, that are huge structural impediments, and all of these systems are connected, right? The student debt system is connected to the fact that Black families had less wealth and less home equity that they could use to help their students go to college. And now those students go to college and have to take out more debt, and their parents are also taking out debt while they're still paying off their own debt from college so that they can go to college. And then when they get ready to buy a house, they can't buy a house either because their debt to income ratio is too high. They haven't been able to save for a down payment. And their parents, again, still paying off the Parent Plus loans that they had to take out to help their kids go to college because we have not adequately funded higher education. So all of these things are connected, and it's a generational issue, and we need some radical fixes. And it's going to take, we talk about the Paycheck Protection Program a lot. Federal government has money. $600 billion in forgivable loans went out, largely bypassing many of business owners of color. But that's just an example of how the government has money to give out to when it wants to and in a way that it wants to. And so it can do that again. It's done it many times throughout history, giving land, giving houses, giving money, just not to people of color.
Yep, that's right. Maiza, I see you wanting to jump in.
Thanks, Angela. I wanted to add to what Ashley was just saying. I'm so fortunate, since I've been in my economic development career, that we have amazing leaders in economic development. And earlier today, I was on a call with Fern Ori. She's the executive director for the Wisconsin Native American Loan Funds. And I took that opportunity to pick her brain to get ready for this panel. But she said exactly what Ashley just said, right? On top of that, our communities have never had wealth. It is also the fact that we have resources in this nation. They've just not been used for intentional purposes to help communities of color. So those resources just need to be reimagined on how they can come back and help our communities. And Fern was so, as she referred it back to the Native American communities and their culture, right? About making sure resources are used for their purposes, not wasting our resources, and leveraging these resources for the biggest impact. And that is something that we need to keep deconstructing and dismantling, because the resources are there. They're just not coming into our communities.
That's right. Thank you for that. I want to talk a little bit about the notion of shame. I think when we get in this space of financial literacy, wealth, and economic well-being, there's a lot of shame in communities of color. And why don't I know what I don't know? How do I get started? And if this is a systemic nature, what do I do? And I think shame, the notion of shame, can be very paralyzing to moving forward. So I would love your thoughts on, for folks on the call and watching this, if we have internal shame about finances, how do we handle that in order to not only help ourselves and our families, but to help all of our communities of color begin to thrive financially and with health over time? What are your thoughts on that? I'll take whoever wants to go first.
Angela, I think you're right. Shame does so much to us, not just on a psyche level, but on our physical health as well. I think about the times in my own family, in my own marriage, when we had very difficult financial situations, just the stress and burden that puts on you. And again, we're educated professionals. So what about our community members who, again, have less privilege than those of us who are disprivileged? And you think about, especially in the Southeast Asian community, the Hmong community, diabetes is huge. High blood pressure is huge, all because it stems from that trauma and stress from just trying to survive financially, trying to survive in terms of sustaining their own family members and finding decent jobs, stable jobs. That shame does so much to people, to each and every one of us. When I was at the Hmong Chamber, what we ended up doing around financial literacy, right? And this goes back to a point that Ed, you made earlier about some of our small businesses, and particularly our minority businesses, they don't necessarily have that business acumen, right? The accounting expertise, the back office expertise. And so I had an aha moment, which is actually what I call my duh moment of, well, if my community doesn't even understand how this system, this financial system in this country works, how can they even be literate in their own business finances? And so what we ended up doing was we took the FDIC's financial literacy curriculum and we completely retweaked it to be culturally appropriate and culturally relevant so that we could start teaching this American system to our community. And unfortunately, because these systems are in place, that's where you have to start, right? Is educating your community on how do you work within this system so that you can be a healthier family, so that you can hopefully get to some financial stability. And so I think it's those sorts of creative ways in which you not take advantage of the system, but you use the system to come back and educate your community. And that takes away some of that shame, right? Because then people feel informed. They feel a little more empowered, like, oh, I understand now what you mean when you talk about a checkings and a savings account. I now understand what you mean when you're giving me this template on a budget of expense line items that are relevant to me. For the Hmong community, for example, it's funeral expenses. We spend thousands of dollars on our funerals, but how do you even think about putting that into a mainstream American budget, right? But when we break it down so that it's appropriate and relevant for our communities, that's where that power then stems from, that education stems from.
Yeah, I think when you thank you for that mindset, and I'll build a little bit off of what you said too, and kind of going back to that shame factor and that place of burden, right? It is your fault you don't know this, and putting that on there. And it's Ashley spoke of that from the policy side. Myself working for a financial company who serves many financial institutions, we see that as well, and it's putting that burden of knowledge on the person who we are saying doesn't have the financial literacy we want, when in fact, it could be the loan officer who doesn't have the cultural competency they need to meet someone where they're at, as you're saying, mindset. And I was just on a panel over the noon hour where they were quoting a study that was done and published in an article called Banking While Black. And they had secret shoppers going. You may be familiar with this one. They sent white, African-American, and Hispanic shoppers in, and this was for small business loans, none of the white secret shoppers were asked to provide a W-2, which you don't need for a small business loan. 17% of the Black people were, and 12% of the Hispanic people were. So I really think that in some situations, whether intentional or not, in some situations, yes, intentional, we're exasperating that shame. We're taking advantage of that. You're throwing up determinants and hurdles in front of folks because you know that they may have that shame and you want to give them additional steps. And I also think a huge thing is not talking through the process with folks. If you're saying that, the next step in this will be, we'll take a look at this and we'll call you back and we'll meet with you, that sounds a lot like a denial for the processes of most things. If that is the way that your institution does business, talk about that, lay that process out for folks who may not have gone before so they can become familiar with it and not assume that it's just another denial, because there is so much discrimination done within this space.
Ed, were you wanting to jump in? Thanks for that, Opal.
No, I totally agree with everything that the panel has said. And Don't be ashamed. Find someone that you're comfortable with. Normally, most time people of color who go into the financial industry, it's not about a paycheck. It's about bettering our community, right? I mean, like I'll give a great example. This whole PPP thing, and Ashley mentioned a lot about the federal government, and I agree with 100% of everything she said. And I've been in federal bank examinations and even dealing with this PPP, I personally went out to a lot of the small businesses in our community who didn't even have computers to tell them about this whole PPP process, because you would be surprised how many of our folks that didn't know. And they were like, well, I never heard of this. But it's nothing to be ashamed of, because a lot of these things are intentionally done to prevent certain people from taking advantage of these opportunities. But if there's something you need to know, go find a person of color and ask these questions, because we're definitely here for the community to provide this information, and and to make our community a better place. So yeah, there is shame, but don't be ashamed. Just go out and ask. And I was just sitting here thinking, like, I've been working in my career for over 20 years, and whenever I went to a new job, HR profession never told me to put at least 10% or more of my money away in retirement plans, and that 10% is tax deductible. But no one ever told me that. Now I figured it out after about 5 years, but imagine people who don't work in this finance field and they never even heard about it, and how much wealth they have lost because of this information not being shared. So, and I say all that to say, it's nothing to be ashamed of, and just ask the questions, because a lot of times this information is being held from you on purpose.
Thank you for that, Ed. So we are getting ready to close out our session, but I want to have each panelist just drop their gems of wisdom as it relates to color of money as we kind of close out. So Ed, you go first. Any closing thoughts?
Closing thoughts, ask the questions. I just act from a perspective of a business lender. If you're denied a loan, a business loan, ask why you were denied. Don't just accept no for an answer. Uh, Reduce expenses, increase revenue, and just always ask questions. Don't be ashamed.
Great. Thanks, Ed. Mainza.
Yeah, I don't know how wise I am. I would just say again, this stems to my earlier conversation with Fern Ori. I think it's about us returning back to basics and respecting each of our communities and being much more communal and supporting each other and supporting our local businesses. I think that's how we get back to humanity. Is we need to become more communal
Awesome.
again.
Thanks, Mainza. Opal.
I just think really looking at who is at the table. Mine's your comment earlier about the differences between different Asian communities, Hmong versus Korean or Vietnamese, for example. Those are hugely different communities when it comes to economics. If you were not at this table, if you were not on this panel, that doesn't get said. We have so many financial decisions being made by tables that don't look like any of us at all. And we need representation that is not always white, not always older, not always male, and not always privileged. And that's where those decisions have been made from thus far. So really looking at who's at those tables to make those decisions and execute once decisions are made.
How do you recommend folks go getting at the table?
Stop making requirements fit privilege. 25 years of this to be on our board. You're not going to get anyone who's in Gen Z or millennial for that. You're not going to get anyone who's been marginalized, period, probably for that. So really looking at those things and where your expertise can come from. Doesn't have to come from a boardroom. It can come from a community. You're still looking at budgets. You're still working with people.
Great. Thanks, Opal. Ashley, words of wisdom, thoughts, dropping the mic.
Dang, I don't want to be the last one. I mean, again, I come from the policy perspective, so demanding structural change, demanding that our government actually supports communities of color in the same way that it has supported white communities for centuries. And also demanding the same thing from our financial institutions. You know, so many companies and financial institutions have come out in support of Black Lives Matter. There are things that they can do within their own practices that will actually support Black lives and help change things.
What kinds of things do you think our corporations should be doing, our financial institutions specifically, to support Black lives?
Financial institutions, how is your lending in communities of color? How are you doing outreach to communities of color about home ownership, about small business lending, about all of those pieces? When you're getting your credit for a Community Reinvestment Act, what is it for? What are you actually doing? Who is it actually benefiting? How are you addressing your own legacy of discrimination? Again, looking at your numbers, looking at the diversity within your ranks. I love to see all these companies that are doing grants to business owned by people of color, business owned by Black folks, doing grants to HBCUs, things like that. Banking institutions can also partner with the CDFIs and MDIs that Ed was talking about earlier. There are so many things that they can be doing other than just saying they support Black lives. You can put money and efforts back into these communities and support them in a way that hasn't ever happened.
That's awesome. Thank you. There is a practice that we do at CUNA Mutual for our DEI team meetings to do a closeout and a checkout, and it's a one-word checkout. So what's top of mind, what's coming up for you in one word, and I'll want us to go around and do that, and I'll end. So what's top of mind, thoughts, reactions about this panel in one word, and we will close it out that way. Ed, we'll start with you.
Change.
Great, thanks. Ashley.
Action.
Great, thanks. Mainza.
Reimagine.
Awesome, thank you. Opal.
Inspired.
Awesome, thank you, Opal. And mine is grateful. Thank you all for joining us. The wisdom on this panel is amazing. I could go on and on for this topic for a long time. So thank you, and thank you for everyone who joined us virtually. Take care. Bye.
Bye-bye.
The 2020 Minority Health Film Festival offers a diverse variety of films and events that we just wouldn't be able to offer in the in-person cinema experience. But I think what really makes it unique is the focus not only on public health issues, but the issues that really concern communities of color. If you're looking for a reason to engage or to try it out, this is the perfect time. Just go to mkefilm.org/MHFF